Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO and founder of Aza Finance, Elizabeth Rossiello. Thanks for joining me.
Thanks for having me.
Okay, so before we get cracking, let's learn a little bit more about Aza Finance. So, Elizabeth, your website says you're a fintech for Africa's B2B sector. What does that mean in practice?
We're focused on businesses building into, out of, and across the continent. So we work with businesses paying other businesses, businesses managing their own treasury, and businesses that actually pay out to B2B, but we don't work with retail directly. So we're powering the businesses and fintechs that are growing the African economies.
Okay, and how's business these days?
Awesome. I have to say, since COVID, it's been a straight line up. We are really excited that some new markets and regions have just been on fire. I think when we started 10 years ago, East Africa was the story for fintech growth in the region. And since then, Nigeria, Ghana, South Africa, Francophone Africa, West Central, just entered Egypt. So it's been incredible growth the last decade.
And did I see that you were either about to or did reach the $100 million revenue mark?
It's our goal in the next 24 months, so we're on our way.
Okay. And does operating in Africa, almost paradoxically, but these days perhaps appropriately, does that in some way kind of shield you from the issues of high inflation, interest rates, geopolitics that may have slowed down growth or reduced enthusiasm for many fintechs in Western markets?
We have definitely different drivers of growth in our markets. Obviously, we have some former or current petrol markets, quote unquote. And so, global petrol prices definitely affect the local currency fluctuation and volatility. They also affect global lending, and we have some markets that are heavily based on IMF debt. And when that gets readjusted based on, the wider global macro position, that definitely affects us. I think the big news in the last year has been the loss of the petrol subsidy in the Nigerian market, which has triggered quite a big revaluation of the Naira. We also have a reduction in the peg, or a loosening of the peg. We have a peg of the spectrum in the markets we operate. So those are two big drivers that really affected the West African currency market this year. Some, more or less related to global drivers. But the great part is that a lot of our growth is non-correlated, and we see growth when other markets see stagnation, and we have seen hyper growth, not only from population growth, but also from technology introductions, urbanization, and, the maturation of these economies, which, only 50 years ago had a changeover from colonialism into republics and federations. So we're really just seeing the birth of a lot of these nations.
And I mean, I think you touched on this just before, but Africa obviously isn't a homogenous entity. Where do you see the best prospects for growth, and perhaps where are you, let's be diplomatic, less optimistic?
Well, you're right. We have 55 markets which we can operate in. We've stuck to the larger markets as a start. Obviously, South Africa is the most highly regulated market. And there we see a lot of growth, but there's a lot of restrictions, a lot of regulation, and it's a bit more of a crowded market. Francophone Africa for us has been an incredible place to do business. We have really, had a bit of a step ahead in that a large part of our team is Francophone. I'm bilingual, and we kind of got in before the fintech boom, so there's a huge opportunity there. Although a lack of regulation means certain growth will be stifled until that's clarified. I think North Africa had been difficult to enter in for the fintech groups. There have been some homegrown companies, but you don't see a lot of Pan-African companies going there. And I think the markets like Angola, which still struggle from extreme restrictions, both on a global level of bans and a local level, are just very difficult markets to enter.
Okay, so we've heard a bit about Aza Finance. Let's now get to know Elizabeth a little bit better. So, Elizabeth, you're based in London. I would imagine that you spend most of your life on a plane. You've got obviously family as well. What does a typical day look like for you, or a typical week, perhaps?
When I started the company, I lived in Kenya, so the day was different there. And then I moved over to Nigeria and Senegal. But the last few years, the last 3, 4 years, I've been here in London. And I think now, and this is for any founder, 10 years in, my job is less hustling around, opening bank accounts, meeting, junior clients, hiring directly. And my job now is major key account relationships, shareholder relationships, global partnerships and regulatory work. So I have a very different job than I had 10 years ago. A lot of my global clients do come through London more than they did come through Senegal. So the board asked me to move up here, sadly. London's a little colder and less delicious food. But I think I deal with a lot more of super senior clients and then global regulators and shareholder. And I do travel back. Like next week, I'm going to be meeting with the Bank of Ghana and the presidential suite in Accra for a big event. And then the following week, I'll be in Nairobi for some key accounts and client meetings.
Okay. And what would you say? I mean, you mentioned a couple of things that you used to have to do back in the day. I'm imagining they weren't always great fun, but what would you say is the best and the worst thing about running a fintech in Africa?
I mean, there's just so much variety. I really like the team building. I love that we have teams of different cultures that come together. And, I'm somebody who's obsessed about organizational structure. So how does a team work together over geographies, over customer demographic, over cultural differences, and really perform at that peak level? And something I'm very passionate about is not working 24 hours a day. I might be thinking and stressed 24 hours a day about a problem, but I do believe you need to kind of come away from the work and, take a shower, take a jog, take a run, eat dinner with your family, and you have time to kind of process how to solve a big problem. I definitely work more than the average person, but I do think I always take time a few hours a day to come along. And a really interesting Harvard business study I read a long time ago showed the average day of the biggest CEOs in America. And all of them had someone who protected their schedule, and they all took time with family. They took time to either meditate or be religious or do something peaceful, and they exercise. And I kind of try to follow that on a daily basis. It's really exciting to work with so many different people and teams and mentor and grow, but it takes a lot out of you. So you have to kind of prepare yourself and, put back in if you want to go the distance. I think the other thing that we struggle with is just a lot of volatility, new regulation, new president, someone trying to give us a shakedown, a market going bust, a key account problem. And I think we just have to expect volatility every day. So I kind of come in with a mindset of things are going to be wild every day. And then actually it seems less wild. So, we have sued the biggest telco in Kenya. We have had fights with governments. We have had client battles. We've had public relations issues. And through it all, we just realize it's just a volatility and it'll go away and we just get through it. So there's been a lot of up and downs over the years.
You mentioned the importance of taking time for yourself away from your day job, even if you're still thinking about it. You mentioned a couple of things, whether running or whatever. What is it you do to when you're not, at the desk or meeting people or working?
Well, yeah. I mean, I've got kids, so every time, and I'm a single mom, so every time I'm not traveling, I try to walk my kids to school or eat dinner with them. Luckily, it's the UK, so people eat dinner early. and then you can go to a work dinner later on or, get back online if you need to. But I think that break is super important. So if you start, I used to be on a trading desk and I used to start at 6:05 a.m. and work till 8 and then have events in the evening. I think that just burns you out. So it's super important to take that time, especially if you're in a strategic position, or an executive position where you have to deal with a lot of volatility and you have to make those key decisions. I'm also a big yogi, so I do a lot of yoga at home or in a hotel room.
Great. Well, it sounds like you also sometimes get to eat 2 dinners, and that's not to be sniffed at either. So, all right. So look, Elizabeth, the key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Aza Finance CEO and founder, Elizabeth Rossiello. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now, Elizabeth, let's talk about the future of finance. So, Elizabeth, in developed markets, I mean, you're living in a developed market, but obviously your business is focused on emerging markets. But everyone's been getting very excited, obviously, about artificial intelligence, AI this year. Do we see the same hype, justified or otherwise, with financial technology across Africa?
Of course, yeah. I mean, there's a really cool company called Lalapa out of South Africa who is making sure that African languages are available to AI models on the internet so we can gather data from African populations at every socioeconomic level. I think that's that's a lot of work that still needs to happen to be truly equal. But I think we have huge populations in the market that we operate. I mean, most of planet Earth will be African at the turn of the century. Think about that. This is where the population growth is. And across those large population demographics, using AI for transaction monitoring, KYC, identification, pattern, especially with trading, understanding trading patterns and pricing trends. I think there's a huge opportunity. I think we're just at the start of it because so many companies here are young. We don't have a lot of big tech companies that are non-American or non-European or non-Chinese focused. So I think, having some of those come out of this market with that mentality will be the big game changer in the next few years.
And so by the sounds of it, certainly with the incorporating all of these different languages, for example, in different countries, within countries, financial inclusion would seem to be one of the big benefits that AI may bring to the table across Africa.
Yeah, and it seems like we need financial inclusion soon in Europe and the United States too, given the way the markets are moving.
Right. And I mean, are there any particular countries that you would kind of single out as standing to benefit more than others from the AI revolution?
Well, I think just where you have data readily available and you have huge populations, Egypt, Nigeria, obviously, I think it's super interesting. I think when I first started work on the continent, I was doing microfinance work. There was a big discrepancy in the cost of service for high population or high density population areas and low density population areas. It's a completely different business model, so servicing those high density populations, we're talking some of the biggest mega cities in the world. Using AI can just lower the cost of sales and make outreach, monitoring, efficiency, onboarding just so much more attractive and lower the barrier to entry for new companies.
Right. And of course, amid all the AI hype, that there's still a desire from investors, founders, and I suppose customers as well for finance and fintech to make the world a better place. Or to have an impact. We talked about more sustainable. We talked a bit about financial inclusion there. In terms of fintech, sustainable finance, are we seeing fintechs and financial organizations, internalizing the need to kind of, sustain the planet, to make it better, to improve the situation there on the ground?
I mean, I wish people in fintech were, more benevolent than other humans, but I think we're just the same. I think it's the same proportion. I think personally our company strives to break the stereotype of what a company can look like. And, I speak very publicly and very widely about breaking the stereotype of what an African customer looks like and what an African B2B transaction. Very often investors will shake their head and say, how do you stay compliant? Or, how can these people, use this? And I think it's just so much misinformation about what these African markets look like. And I always say that I was always the poorest person in my neighborhood in Nairobi and Lagos and Dakar. And we're a lot of Western investors and companies, fintech companies, completely underestimate the power and the energy of these markets. And so I think if we do any social service to planet Earth, it's just shouting from the rooftops about the opportunity that's here and how the populations are the same as elsewhere. And I think there's just this huge bias about not entering the market or not trying to enter the market or being too difficult to enter the market. And I think, just equalizing the approach is step one.
When you mentioned a little bit about regulation earlier, that in some countries regulation is perhaps tougher than others, or at least clearer than in other markets, and in some places are more welcoming for fintechs or other international companies such as yourselves. How much of a help or a hindrance are financial regulators, and who would you hold up as a paragon of virtue, and perhaps give a put on the naughty step in terms of regulators in Africa?
Well, you're not going to trick me into bad-mouthing a regulator on this interview. But I just published in Forbes an article about this. I mean, despite the fact that I grew up in the crypto community, regulation is important if you need outside investment from non-crypto community. I think investors like certainty, no matter what they say. They're not seeking alpha and risk, they're seeking certainty. And I think when there's a lack of regulation, it spooks a lot of growth investors and it spooks a lot of partners. And rather than see the opportunity or the excitement, they see the potential downfall. So I think more regulation really helps if you need capital to grow your fintech. Now, some fintechs don't need that much capital. So it's a different aspect. I think you have to be able to surf the changes. So if there isn't currently a lot of regulation you're operating, you have to be aware that that's going to change one day. I was just talking to somebody who was the counsel at Uber when they were in trouble with like 120 regulators. And they were like, well, we just need to continue. And they were like, no, now you need to change the model and comply. So I think it's fine if you want to operate in a gray space, but you have to expect that gray space will get colored in and then your model will shift. And I think to, refuse the likelihood of that happening is impeding your business and will slow you down. So I think you just have to be able to operate at every stage of the regulatory cycle.
And again, we mentioned that you are headquartered in London, despite your fintech being focused on Africa. Despite Brexit, and I'm sorry to mention the B word, despite Brexit, it's still widely considered one of the best places in the world to found a fintech. And now major companies like Microsoft kind of saying that this will be a top place for AI as well. What do you think? You obviously got a lot of international experience. Obviously, people can hear from your accent that you're not, from these parts. And so what's your perspective as to the prospects for London or other places as the hub for AI startups as well as fintech?
So our biggest offices are still in Nairobi and Lagos and Durban. And we have, offices in Accra and Dakar, Kampala that are as big or bigger than London. London is a small office of just the seniors because we have to deal with so many global big companies. We work with some of the largest remittance and payment and fintech companies in the world, and they are headquartered here. So we're kind of a follower in that we're here because of them. I think also as a Brexit hedge, we purchased a company in Spain, and we've really liked having that as a base for the EU. Been very easy and low cost to operate there. The Spanish government, although a little slow, is really supportive of fintechs and defends them against, any kind of pressures from the bank. I had found that much more supportive here than the UK. Our regulator, is slower than the other regulator. It's not like it's extra fast here. And I think the banks are very risk averse. So, while there are a lot of clients globally, and it is a global study, and conferences, the investors, the partners, big companies are all based here. And it's the center of the development community, the African investment community, the foreign exchange community is here. And a lot of important segments and sectors that are based out of London. I really wouldn't say that it's easier for a fintech than to say in Spain or, maybe in Amsterdam. And definitely not in Nairobi and Nigeria, which are great places to have a fintech.
And you touched upon it just a few moments ago. You were, I don't think you are anymore, you were co-chair of the World Economic Forum's Council on Blockchain. Crypto, of course, has staged a remarkable comeback this year, so much so that I think FTX customers are getting all their money back and then some. Where do you see crypto going from here?
I think I've always said, I see Bitcoin and Ethereum as gold and silver, digital money. I told my mom that, several cycles ago, and she's got a small savings bundle now from her Bitcoin investments. I think, there's so much institutional money in those top two coins and systems that's sticky and that's here to stay and that will continue to appreciate in value. I think a lot of the excitement and play on a lot of the junior token, there's going to be a lot of noise that's considered like the penny stocks of a market. This nothing new in planet Earth, right? This is a rewrite of other cycles that we've seen before. You'll see the blue chips at the top, and you'll see some froth in the middle, and you'll see those like low energy ones at the bottom. So I still am a strong believer. I once was a Bitcoin maxi, and now I'm a little bit more open, but I'm still a very strong believer in storing value and in Bitcoin, and I think Ethereum has done incredible things for that. I think we don't even know what is to come with this. I mean, I think we've seen the first hype cycle. Now we're building infrastructure. We've had a couple of explosions, but the second big peak is yet to come when a lot of the things that are being built in layer 2 and layer 3 and Web3 are coming out later. So I think I'm still huge opportunity. I mean, stablecoin boom alone in Africa came out of nowhere 24 months ago. And now, 30% of our volume is in stablecoins. So I think, I wasn't predicting that 4 years ago. So we still have to expect the unexpected. And, despite the fact that there's been some blow ups by some idiots, there's still a lot of value in this space.
Okay. Well, I think that brings us nicely to our round of rapid fire questions. Are you ready, Elizabeth?
I'm ready as always.
Okay, so what fintech segment has the biggest potential over the next 5 years?
Identity.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
US dollar transactions.
Are bank bosses ready for the AI revolution?
Absolutely not.
I think I know the answer to this one. Have you ever invested in crypto?
Every day.
Are physical points of sales part of the future of finance?
No.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
CBDCs become a mainstream reality in the US or EU?
0 chance.
You'll be able to open a crypto account at a top-tier bank?
100%. 10.
Swift will still be the main tool for transferring money around the world?
No. 0.
A new card or non-card based rival will emerge to challenge Visa, MasterCard, Amex?
10.
And
binary.
we'll see a top-tier bank or insurer bought by a fintech.
10.
Okay, wow, you managed to get through everything with 5 seconds to spare. So well done you. I think that's a first, but I'm afraid that's all we've got time for in terms of our rapid fire round of questions and also for our conversation. So I really just want to thank you, Elizabeth Rossiello, CEO and founder of Aza Finance. Thank you so much for joining me today.
Thanks, Elliott.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. Sorry, X, at Paris Fin Forum. See you next time. Bye-bye.